That's what I was doing. I was taking a gamble on ignorance.
Welcome
I had
back,
no
guys.
idea what I was doing. I was
Good
entering markets
afternoon.
that could have absolutely decimated me.
Good
Well,
afternoon, and welcome back. This is weekend on Sundays, and this is our weekly market review. So basically, I'll be talking about more on the weekly chart, which is on the weekly contract for both DXY and Euro US dollar. So we'll be centralizing our ideas more on this time frame. Then, if you want to know more on the lower time frame, you can go to my YouTube channel and watch the March 5th. Is it, yeah, I think it's March. What's the day? Day is March 5th, 15. All right, on Friday market review. So you can look, you can, know more about what we expecting on the intraday market action. So before I go on, please, if this is your first time coming to this channel, please do me a favor, click on subscribe to this channel, and follow me for more, like these videos, and give me your comment at the end of the video. Right? Thank you so much, and God bless you. Right. So I'd like to add something before going, before actually telling you what we're looking out for on this time frame. Now, there is this ICT concept that deal with what swing points. All right, when you hear about swing points, where at any point in time there is always a swing in price at a particular point. So these swing points is classified on a swing high and a swing low. Right, these are concepts that I actually do add to my analysis, but mostly I don't talk about them. That is, there are so many concepts that there are so many ways that I predict and I approach this market, which I don't normally I don't talk about. Just openly, I don't just come and talk about this and that. I don't talk about them. That doesn't mean that they they're important, but there's just a way of me to look into more of this. Why am I saying this? Because it's very important, because I'm going to reference to it on this particular time frame and on this particular market. So let's dive into what we have. If we have time more, we can still discuss, but let's focus on the actual business that we have for this particular video. Now, the Euro USD daily contract respect the monthly retracement after an in expansion higher and close slightly at the weekly swing high, leading to the perfect leading to the perfect formation of weekly ICT fair value gap, or BC. Now, what I'm trying to say there is that on the monthly time frame, when the first week of this month, which is the first week, expands higher impulsively. So what we expect after some such expansion, we want to see a retracement. But do we don't expect that retracement to cover up everything, but just a slight retracement. So that's what I'm referring to that. And we tap on the swing high now. This is where it comes. If you look closely on my chart, I don't know, let me actually bring our view on this particular area, because this is where we are interested in, isn't it? Now this is it. Now, if you look at this candle, is this particular blue line is referring to a swing point. Now, if you look at this market from here, all right, from here, you see this is a swing low. We have a candle that is low, that is higher than this low, and a candle that is higher. So this is a weekly swing point. Now, if you look at this weekly swing point, you look at the high, which is the top of it. You see one, two, three. Which one is higher? This one. So we're going to reference on this one. Now, if we reference that on this one and we call this our swing high, then we want to see how market react to them. Now, look how on the weekly perspective, look how the candle closes at the top. The market closed at the top of this weekly, just something like something is sitting down on that top. And this is why we use the body of the candle as the narrative and the wick as the destruction. So we want to focus primarily when you first open your chart, forget about the wick, focus on the body, right? Then after understanding the body, then you want to now see the wick, so that next time you want to be able to identify where the wick of the candle is going to wick down to before going to the direction you expect it to. So that being said, if we focus on the body of this candle, we can see that the body of this particular candle is resting above this high. Then if that's respecting above, that shows that the market is respecting that swing high, which is a swing point, right? The swing high is characterized by this low here, not this, because if we also look at this, we have a high and a low. So you have a low and a low that is lower than this high and also lower. So this is another swing, but now an inverse swing to this one. Since our draw on liquidity is basically our buy side liquidity, that's why we're making use of this. All right. So as we have tapped and respected on this area, we want to see market next week body should respect, we should open on the line and also wig lower before going higher, right? So that is it. On the weekly contract, we can clearly see that price is respecting the swing low and what sorry I mean swing high. Sorry for that statement. Price is respecting the swing high and has just retraced into the discount market price on what intraday market price. All right, although we are looking at the weekly, if we get to this green line, that is the 50% region for the weekly. If we mark the body, because this week is a destruction, a liquidity sweep, we're not going to mine this week. So if we want to know our our region, we're going to make use of this body, the body of the candles. All right. So if we make use of the body of the candle, the 50% is just below this green line. All right, they are below this green line. Now this is a fair value gap high, weekly fair value gap low, and the weekly fair value gap high. This week and the previous or the past week, we can see there is a tiny fair value gap here, which we want to see the market, deep into before actually going to the projected what direction of the market. So that is very important that I should add that to the market. Now, if euro find its way lower into the fair value gap or BC and tap on the weekly swing point, I will be looking forward to I'll be looking forward for price to print higher impulsively after reacting to that area of interest. That is, if we trade into this area and we tap on this below this or we get inside the fair value gap, I want to now see the market start engineering what buy side delivery, then start giving us sign that is going to reverse. Okay, that's very important that we see that in price. Now, our weekly draw on liquidity is previous week low, which is less than previous week high. Now, understand this statement. Okay, let me finish the paragraph before, which is our weekly draw on liquidity is previous week low, which is less than the previous week high. As we are looking for price to take the low and then price higher if it is going to deliver what bullish condition. Now, what I'm trying to say with that statement is that on a weekly perspective, since we have a fair value gap, we want to see market take this week previous week low. Now, if we take this previous week low, then our actual uh, draw on liquidity is buy side liquidity, but this is area of liquidity as well. Previous week low is area of liquidity as well. Since we are looking forward for that to be taken, we want to see it just taken after we take that low, then price to go higher for the buy side liquidity, and that's why I said it is less than what the previous week high. That means the previous week high is our greater what draw on liquidity than what previous week low. So that is what I mean by the less than previous week high. I'm not adding mathematical equation to trading. I think this is very interesting. Now, the weekly profile is an obvious. Okay, before I go on this statement, we need to go on a lower time frame before I can actually, go down this, because I want to talk about weekly profile. Now, how the week ended and all that. You need to be able to study your weekly profile so that at the end of the year, you can have different, you can go back to your chart and look at different weekly profile that you have. Then you now see, do your own statistics to see which day of the week has the highest or form the high of the week or low of the week. So when you gather these statistical data, you can make use of them in the coming years. That is that's the projection, or that is the progress we want to see in this market. So this is the our indicator, which is the XY weekly contract, right? This the dollar index, as we all know. And on the dollar index, we can see the reverse of everything I've just said on euro, because they work in reverse to each other, right? So in inverse of each other, that's what I mean. They work in the they work in hand to hand. So on the dollar index, we can see that this swing point here, we have this swing high. Now it's creating also a swing low here. So we are inside this point, and now look how I am now going to invert this statement. Now we want to look at this candle with consequent encroachment. We don't want to see the body of the candle go above this consequent encroachment if we are on the right track. I don't know if you can see this part too, but sometimes if I go back and watch my video, sometimes it does not look that clear. Although I understand what I'm trying to say, but what about those that actually know what I'm referring to? So what I'm trying to say here is that if you if you mark out this week, this particular candle, which is Monday 19 February week candle, February 2024 week candle, you can see the week. If you mark out the consequent encroachment, we just see it, we just fall short of it a little bit. So if we will open next week and we price or no market week into it, we want to see us reverse. Now we are making use of this consequent encroachment as our what, our our confluence on the XY. That's very important that I bring that to your notice. And also we have a fair value gap, which is a CB. The other one is PC. Now it's a CB. So we want to see the high of this week taken before we price lower. If it's going to take the low, we don't know yet, but we are going to price lower. And if we price and we take out this low, then this now give us what, a oh god, MTN. This is just very, so that's, sorry, that's network and about and that's my MTN as well. So if we get into the fair value gap, which is a CB, then we are looking forward for that to be respected and for that areas to be very, very, very respected area. And one of the things I would like to say is that I want to see them treat that area as what, institutional order flow entry drill, as an institutional order flow entry drill. So I want to see them go way, 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 way above it. You understand? So just tip into it, then reverse back. So that is it, that's it basically for this market. And if we respect it and we price lower, when else can we expect the market to stop? We have this fair value gap here, but that fair value gap is very close to a liquidity point, so it is going to be, it's not going to be that effective, because since it's very close to a swing low, which is a liquidity area, which is a sell side liquidity, and it's an area of liquidity where we are looking for the market to take. So that's basically we can. And also if you look at this price move, we take out buy side and we tap on a premium PDRA, and ever since then we have been pricing lower, although the price low, the market the lower price delivery on the market is kind of very slow, but it's slow and steady, and it's giving us lower prices. That shows how effective this bearish order block is, and we could also see how it creates this irrational value gap. Now, if you are sensitive enough, what is happening here is basically what is going to happen here. So next week might actually be a very big expansion week. Now, if you look, we rally impulsively. Then the next week, what we move higher to fill in in some of the inefficiency. And the next thing that we see a very impulsive market lower. So if care is not taken, this is exactly what we're going to see here. And this is just a very typical example. And if you don't want to think about this, you can also look into this area. If you see, we have a green candle and the next candle rally lower, and when we price into that area, what happened? We decline it. Although because it was in a discount and the market need to go to premium, it did not respect it to or create a new lower low. Rather, we move lower, then we come back, sweep that area, and now we are going lower. This is how the market is painting. All right, that's how it's dipping its hand to us and it's painting lowerly, going lower, and all that. So now I'll be going to the daily. I'm not coming back to the DXY since I already have everything said on the daily time frame for DXY on YouTube. But since we are focusing more on euro, so let me go on the dollar on the daily time frame. Moreover, I can also go on the 4 hourly if time still permits. But currently, I'm going to the daily time frame so as to tell you guys about the weekly profile so we can explain some certain parameters on that price action. All right, so this getting it more interested. No, sorry, this make it more interesting. Now we can see that this is our Friday, candle, and we have a fair value gap here, which is a CB that is opposing, our bullish bias. But if Monday opens, if likely if it's traded into this area before going lower, I think that would make more sense. But there is instance that we could open, we go lower into the PDRA, then we move higher impulsively. Now, this is our daily bullish order block and also our daily swing point. Now, if you look at the daily, you see that this particular candle that has, let me expand this. So since we are focusing on this area, this particular candle that has this line has a low here, and also the lower low here, it is lower than this. So it is the swing point, and if you look, it is the candle that has the highest wick upward. So that is the daily bullish order block and also the daily swing point. So if eventually we tap on it, but I'm not so critical if we are going to actually tap on it, but we are going to go below this Friday low, then tap on the weekly fair value gap. This is the weekly fair value gap, these two green line. This is the high and this is the low. If we tap on it before we see a bullish, I think next week is going to be very impulsive and it's going to give us the highest expansion on the month. No, this is how interesting it is. Now let's go on the weekly time frame. Let's go on the weekly profile. The weekly profile is an obvious Wednesday as the high of the week that price higher into the consequent encroachment of the previous week Friday candle and reprice lower impulsively. Now, this is what I'm saying. If you mark out this candle, sorry, time will not permit us to explain this whole thing, but now, if you mark it up, now look at this candle, look how we treated the candle. On the consequent encroachment, we price into it and we rally lower and leading to what? Thursday to give us a very bullish low, which is the highest expansion of the week. Now, the low of the week is formed on Friday that sweep the Thursday low and reprice higher into the weekly range. Friday, definitely. If Wednesday is the high of the week, Friday is going to be the low, and if Wednesday is the low of the week, Friday is going to be the high. That's a proven theory, and I've seen that. So if we price that's really priced into here, and on Friday sweep this the Thursday low and reprice into the weekly range, leading to the formation of what this fair value gap. So I think this is much enough information I put out today. to enhance you guys insights on Euro US dollar going in next week. So if you find this interesting, please subscribe to this channel and see you tomorrow Monday.